Welcome to a very special conversation. Mr. Dinesh Khara would have completed 4 years as SBI Chairman when he ends his term next week. The numbers show it has been an exceptional 4 years. The bank's margins, which stood at 2.9% when he took over, now stands at 3.3% and even touched 3.6% a year back. The bank's NPAs, which stood at over 7% when he took over 4 years ago, is now just 2.2%. Of course, net NPA is much lower. As a result, credit costs have fallen from 2.06% to just 48 basis points today as he signs off. We have with us the man of the moment, Mr. Dinesh Khara himself. Good morning, sir, and thank you very much. Many congratulations for an illustrious 4 years at State Bank. Let me start with the last battle that you are fighting. You began fighting bad loans. Now all of you are fighting for deposits. Just what was the message from the finance minister?
First of all, thank you very much, Latha, and for saying all these positive things about the bank. Well, as far as the finance minister's review was concerned, it was on, we have got a system of at least having 2 reviews with the finance minister. And she invariably comes out with the contemporary situation which is obtaining. And of course, we have the privilege of her guidance during that review. And on the top of it, she allows us to speak our ground level situations as well. So I think it's a good way of interacting and also knowing what is happening on the ground and the steps being taken by various banks to tide over the challenges which are there in the ecosystem. So this was the broad theme of the FM's review. And I would say that it was quite an encouraging review which took place.
Okay, well, primarily it has been a war for deposits, and Soumyakanti Ghosh, your economist, has written a brilliant report on the state of deposits. He says the divergence between deposits and advances normally lasts for between 2 to 4 years once it starts. So he forecasts that by June next year, it would be all over, June to October. You agree with that assessment, or it could be over even earlier?
Between deposit growth and loan book growth. I think growth is one part. At what price and cost that growth is happening is the other aspect which cannot be ignored. You know, while in financial institutions and more so in the banks, it's more like it's a trinity. One is, of course, margins. Second is asset quality. And third is a growth. So this is a trinity which needs to be balanced out. So I think depending upon the credit deposit ratios, each of the bank is probably coming out with their own strategies. And those who are in a credit deposit ratio which is quite on the high side, they are trying to garner deposit by all means at whatever cost they're in a position to raise.
That's right.
But there are a few others who are in a position to calibrate the deposit interest rate. Because what is happening is that of late, when it comes to allocation of anybody's saving, and more so particularly after the financialization of savings, what we have seen, that there are multiple options which are available, deposit being one of them, markets being others.
Yes.
And it all depends upon the when it comes to the liquidity, what is the preference for the liquidity, what is the preference for the returns, and what is the preference for the safety. It differs from age group to age group. It differs from geographies to geographies. So that is why, these are the micro markets which have evolved of late.
Yeah. No, I agree with you. Actually, yeah, we have those numbers. You even told us a few days back that CDs are always an option. And bank CDs have now reached 9 lakh crore. So everybody's dipping into the market, the yields being low over there. Soumyakanti makes another point, which I'm sure may have come from you to him. The tax advantage which capital markets have, now the difference is too biting. Was that part of your discussion with the FM? Do you see anything happening on that count?
No, I think as bankers, this point was raised. And of course, essentially when it comes to, various financial instruments, how tax efficient are they eventually will decide their acceptability with the various savers groups. So it depends upon the target customers. So that is something which was brought out. But yes, of course, it was deliberated, debated. Of course, these things take its own course before any final view is taken.
Yep, we have just put behind the budget, so we can't expect tax changes
Yeah.
anytime soon. I'm sure you've made your point there. But therefore, Mr. Khara, coming back to the business of the day, do you think deposit rates can rise further and margins can dip a little more in the current year? Would you want to change your guidance on margins at all?
No, of late, when it comes to the loan book is majorly linked to either to MCLR or to EBLR.
Yeah.
And of course, when it comes to EBLR, there is a particular set of the benchmark. In fact, all benchmarks are behaving little differently. When it comes to T-bill, thanks to the government plan for borrowing, that T-bills are now trading low. So that is something, all such advances which are short-term in nature, which are linked to T-bill, so naturally they are priced much lower. But if at all it is linked to, EBLR, which is, or maybe MCLR, which has got a component which comes from the cost of deposit. So cost of deposit again will differ from bank to bank. So it's very difficult to predict whether it will have a overall increase in the loan rates and will it have any dip in the NIMs, because NIMs all said and done is eventually an outcome of the interest earned and interest expended expenses and interest expenses. So we are also seeing that the loan book is going well, and that also helps us in generating much better interest earnings. So that is also a reality. But of course, I would also like to mention that entities like us, where we have got excess SLR, so when we are growing our loan book, we are actually diverting part of the investment to the loan book growth. So which eventually means that when our yield on investments being low as compared to our average yield on advances, so it actually helps us in generating better revenue also. So that's how it works. So I think it will actually differ from bank to bank. Very difficult to generalize how it will
I
be for the
agree.
industry as a whole.
But for your own bank, do you think you will run down your loan deposit ratio because of the LCR? Why do you have to maintain such a high loan to deposit? You can come down even to 105 or 110, right?
Yeah, LCR, as far as LCR is concerned, yeah, of course, we're at about 130. As of now, the discussion paper which has been introduced by RBI, I would say that they are still evaluating the responses from various institutions. It's too early to jump on what is the likely outcome from this LCR related debate. But nevertheless, we, as a bank of our size, we have normally been taking some kind of prudent measures to ensure that our liquidity should be comfortable. So we will. It's more of it's more board mandated guidelines which are there. So I think and board always keep in mind what the situations which will be obtaining in the market.
Okay. Well, just to look back at the last 4 years, Mr. Khara, what was your toughest moment? What was your happiest moment?
Well, I would say that toughest moments were the time when actually I took over charge during the peak of COVID. It was the second wave which was getting introduced. We were getting into the second wave of the COVID, which actually turned out to be quite lethal too. So ensuring that more than 20,000 odd branches should remain functional, the morale of the people should remain high, and we should be in a position to ensure that the wheel of economy keeps on moving. So that was the most toughest moment, and I'm very happy when I look back and reflect on that situation. I would say I'm very happy and thankful to the fraternity, SBI fraternity, because they ensured that the wheel of economy continued to move. And secondly, I must also compliment here the pragmatic policies which were adopted at the material point of time by Government of India as well as by RBI, which helped us in ensuring that the critical sectors of the economy like the SME, etc., they could be provided the required support. People have got very short memories.
Yes.
People would have forgotten what the COVID was. But since it is very green in my mind, I can perhaps never forget what all we went through during the period of COVID.
Yeah.
The human aspect, business aspect, all those aspects. But yes, of course, I always believe that we should not allow the negativity to cloud our mind. I tried to stay positive, not the COVID positive, but positive in terms of
I get
thinking.
that.
Yeah,
No,
so
I
I
get that.
tried to stay positive and ensure that the whole of the machinery should stay positive, and that is something which helped us in navigating those difficult times.
Okay. I have to slip in a last quick question, sir. On the sidelines of that meeting with the finance minister, were you told what is your next position? I don't think they let you go off that way.
No, I think the exposition was, of course, I could really relate to what they were talking about, and I could integrate and synergize my experience into what we should really go forward, what we should do going forward. So that is my own little experience which I could contribute. So I did that.
Of course, I don't think they let you off. I'm sure there are some plans that they may have for you. All the very best, Mr. Khara, for your next innings, and many congratulations for a very, very successful stint as chairman.
Thank you very much, Latha. Thanks a lot. Thank you.
Okay, well, that's Mr. Dinesh Khara, and August 28th is when his term ends. An illustrious career indeed. Wrap up on that note. Chartbusters coming up.